One of the most profound hypocrisies of Bitcoin is that while it's an asset intended to democratize finance, it's also one of the most unequally distributed assets in the world. That is according to our next guest, Ryan Giannotto, Director of Research at GraniteShares ETFs. Ryan, welcome back. Happy New Year. It's a pleasure speaking with you. Let's start with Bitcoin. Can you explain what I meant by what I just said? I quoted you right just now. What did you mean by that?
Yes, David, it's great to be back. Yes, and that is one of the fundamental ironies of Bitcoin, that really it's a major challenge for the asset class. It is intended to be a financially democratizing force, yet it is so profoundly distributed in an unequal fashion. It's really unlike anything we've ever seen. And this is one of the perils of Bitcoin investing that goes unreported, undiscussed, and that really investors need to pay attention to. It is a seriously cornered asset class where only about 0.05% of Bitcoin investors control over 40% of all Bitcoin. And this is a serious problem. And even if we go down a little further, we can see that about just under 0.5% of all investors control over 5/6 of Bitcoin. This is a massive problem when you have a seriously unequal playing field. And this can only exist in the unregulated asset that is Bitcoin. It's a double-edged sword. There are virtues to being unregulated, but here we can clearly see that it is, a substantial peril for all investors, given that so few control substantially all assets.
Well, the Hunt brothers' involvement with the silver market was widely speculated to be the cause of the huge spike we saw in the early 80s. Do you think something similar is happening with Bitcoin today? Is that why it went from 10,000 to 40,000 in less than 3 months?
Yes, the asset has been it's been a roller coaster ride to say the least. Really, I don't think there's any real precedent, we can consider benchmark Bitcoin against. And again, this is a indication of how tightly controlled the market is. There is still free Bitcoin available and so much ravenous demand. And if, in fact, those original controlling investors decide to take profits, it will drown the asset class. And this may be what we saw, back the last bubble, when it peaked about 19,000. Whatever the of Bitcoin are, from an economic and philosophic standpoint, this is a real challenge the asset needs to surmount to become a legitimate mainstay investment.
Can you comment on the liquidity of Bitcoin as an asset? How easy is it for, let's say the majority stakeholders of Bitcoin that you pointed out, let's say they were all to decide to sell the next day. Would their sales go through?
I think that's an untested event. But, if these original investors decided to take profits, they decided to sell, they decided to execute, it would be several times the daily traded volume of Bitcoin. It would wipe the asset out. Whether it would go from there, I don't know. We've never seen an asset like this that's been fundamentally unregulated. And that's part of the excitement, the ride, and also the...
Can you comment on the mechanics of an asset that moves 20%, 30% in a day? This is what we saw last time. How much liquidity and how much trading volume does it take to move an asset 20% in one day in either direction?
It all depends on supply and demand. That's what it all comes down to. And what we're seeing, what is producing these dramatic upswings in particular, is that there is such a finite supply of Bitcoin relative to, it's predominantly retail investor demand. Very small purchases that are just driving the price up. Is it a bubble? Is it the next currency? We don't really know. And what's so fascinating is that the behavior of central banks, so irresponsible throughout 2020, really, it makes Bitcoin look a far more attractive alternative. It's for the first time, central banks have a direct benchmark.
Okay, we talk about institutional money buying into Bitcoin a lot on the show. Well, GraniteShares is an institution. Are you considering adding cryptocurrencies to your holdings, let's say to the HIPS ETF, for example?
We wish. And that's part of the excitement in the space now, is that with the new SEC chair, he's a bit of a Bitcoin fanatic. He held courses on blockchain, and we will finally probably be able to see a Bitcoin ETF. And this The real potential here is that institutions now have a real way to access the market, unless they just want to go and buy individual Bitcoins. But because it's an unregulated market, many have been unable to cross that Rubicon. And Bitcoin ETF will absolutely provide a gateway to real institutional capture. And that's what I think is so fascinating. We see almost a parallel dynamic
you're right.
between Bitcoin and Tesla, where basically institutional interest has forced retail interest has forced institutional capture. Basically, it's been a hostile takeover of the investment institutions by just sustained and fervent retail interest. The S&P 500 had to adopt Bitcoin because of retail investors, and we could see a similar dynamic play out with Bitcoin.
Why is it so much more difficult to make a Bitcoin ETF and not a gold ETF? Did you go through the same legal loopholes when GraniteShares created BAR?
Well, I mean, no, because basically it all comes down to that the SEC hated Bitcoin. They were not going to allow, no, seriously. The SEC chair was not going to allow it under any circumstance. And with his departure and a new enthusiast coming in, Van Eck has filed, many other, entrants have come in. I think we will likely see. So if we don't see a Bitcoin ETF in 2021, we will see substantial progress.